Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing MDA stock so we can determine if it's a buy or a sell. MDA provides geointelligence, robotics, space operations, and satellite systems. The company is headquartered in Brampton, Ontario, Canada, and was founded in 2000. Let's get started with the model. This is a small cap company, 800 million market cap. They're trading at $6.66 a share, and they have 119 million shares outstanding. We're looking at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They still haven't generated positive free cash flow, negative 23 million in 2021, negative 120 million in 2022. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that is positive, 3 million in 2021, 26 million in 2022. This indicates they do have an accounting profit, but they invest a lot in CapEx, which means they have negative free cash flow. CapEx are investments in property, plant, and equipment. So to buy a factory or to buy expensive machinery, that all goes into CapEx, and those dollar amounts are carried on the balance sheet and depreciated onto the income statement each year. Revenue is sales for the company, and that went from 477 million to 640 million. Let's look at the capital structure. 1 billion of equity, 250 million of debt. They're 80% equity, 20% debt. Their net debt is 213 million, and they have a WACC of 12.5%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 1.2 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $830 million. We divide that by 119 million shares. And we get a calculated stock price of $7. They're trading at $6.66, so they're trading at a 5% discount. It's a buy according to the model. Simply Wall Street values the company really high. Their valuation is $21. They're saying it's 69% undervalued. 5 analysts priced this stock, and the average price target is $10. They're saying it's 52% undervalued. This is where the stock has been trading since they IPO'd. So it looks like they started trading in April 2021. It was down about 10% after 7 months of trading. And then in November, December of 2021, it dropped like a rock below $10. It did come up a little bit the next few months to about $11.50. Then from March 2022 to the end of December, the stock really came down. It looks like it hit about $5.50, $6 at its lowest point. It did come up to about $8 a month ago, but came back down. Now it's trading around $7. There could be a lot of upside potential. Of course, they have to generate some positive free cash flow at some point. There are 63 companies in the same industry as MDA, and MDA doesn't pay a dividend, of course. They rank 36th in market cap of the 63 companies. The average market cap is 12 billion Canadian dollars. The median is 758 million. They're a little above the median. They have a really good price to book. Their PE is between the median and average. We can't look at that price of free cash flow. They do generate a lot of revenue relative to their market cap. Their price of sales is 1.2. A lot better than the average, a little better than the median. So to summarize, I have them trading at a 5% discount. I rank their free cash flows 1 out of 10, their revenue 5 out of 10, and their ratio is 3 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.